So, Will, where did we meet? Was it when you were with ARM?
Yeah.
Okay.
We were at the ARM, some meeting when you were still at Kane, or with the ARM crew after your roast, before your roast. I don't know, one of those.
It's always a little hazy,
Yeah.
but before and after
That
on
era.
those things. I always say about that deal, that is my wedding, and I'm the bride and the wedding planner, so I'm entitled.
Those were great. Those
Yeah.
were great. All of those were amazing.
Yeah, those are so much fun. We got Scott Sheffield this year.
Nice.
So yeah, no, it's gonna be a good time. So I've kind of got this hypothetical story for you. Dude I know calls me up, says, let's go grab a drink. Hadn't seen him in a long time. We go grab a drink, and he tosses me a barrel of oil that's a silver dollar looking thing across the table. What was that all about?
Well, I think people like the visual of having a barrel of oil, and we printed a bunch of these solid steel WTI coins when we had our kind of first pre-launch, and we gave them to a lot of like oil CEOs. They're basically using them as ball markers, right?
Okay.
But, and then I would be getting texts and emails like, God damn it, you gave me a ball marker at 60, now it's 90, right? And so people would be like, it's the only gift I've ever gotten that went up in value, things like that. So it's, we each one of those coins was basically minted individually, and it has a code in the back that if you're pretty sophisticated crypto wise, you can go in and put in your code and stick it into your wallet. But I think most people are just using it in their golf games.
Nice. It's on my dresser.
Exactly.
So tell me what you're doing with this. This was a wild story.
Yeah. So, I've been in the, oil and commodity trading my whole career, financially, physically, been in banking, at midstream marketing company, et cetera. And these guys were building the stablecoin of energy, right? That was their high level concept. They were kind of crypto guys from the West Coast, fintech guys, and they didn't really know much about oil and gas. And so they'd come up with a lot of theories of how oil and gas companies would like to use something like this. But they got in on a few calls with like Texans, and like there was a major translation mismatch, right?
Yes.
And so they called me and like, these Texan guys seem interested, but they're throwing all these acronyms around, and we don't know what the hell they're talking about. They don't know what we're talking about. We got to bridge the gap. So I started digging into it. And basically, it was kind of sort of ending my last gig, and it was a good time for me. And I told them, I've been explaining crazy shit to CEOs in the energy space my whole career, right? Whether it's derivatives or a midstream deal or whatever. And this sort of fits into that general theme. And so I, joined.
That's my joke is, what do I do at Clyde? I talk to the old guy.
Exactly. Yeah.
So yeah, exactly.
So, and we've got a group of people. Some of them are like older fintech, physics major, math major guys who sort of are like part of the ETF mutual fund, conversion back in the 90s and 2000s. And then we've got, 20 something crypto degen trader kids, right? Who've never don't own a single collared shirt and don't have like a bank account, right? They just use crypto for everything. Right. And so it's a good mix of people. And I'm definitely on the TradFi old guys spectrum, but you sort of need that to talk to oil companies.
Yeah, you do. So break this down for me. What is a stable coin? And let's direct this to Mom, because Mom watches the podcast. Mom was valedictorian of Lamar High School back in the day and a Rice graduate. So she is smart, but oil, probably something she puts in her car.
Yeah.
So what's a stable coin?
Yeah. So stable coins were, the CEO of our company, JP, he basically founded a company called Uphold, which actually came up with the concept for stable coins about 10 years ago, which basically means you issue a coin and back it with something in the real world, right? Like a dollar, a euro, a bar of gold, a barrel of oil, right? And that coin is stable relative to the value of the underlying asset, right? That's the terminology. It's real simple. It's like whatever that is that's backing it is 1-to-1 with the coin that's been issued. So you take a coin, which is a digital asset, right? It sits there in your wallet. But the underlying asset underneath is connected, via smart contracts and the tech of these coins, custody, et cetera. And the stable coins have been developed. Like Tether was the big innovator of the stablecoin market. It was an offshore company, and they just attached $1 to one stablecoin. So super simple concept, but it amazingly had a huge amount of resistance here in the U.S. Right, and I think it's.
I mean, I don't want to overthink it, but it almost sounds like a mutual fund. Hey, I got a bucket of stocks, whatever. Here is 1/100th of it, or whatever,
Correct.
or or an ETF. I mean, same concept.
For the dollar stable coins, it's a digital checking account. That's all it is, right? You can use it to buy a car. You can use it to buy a pizza. You just transfer it wallet to wallet, right? And same thing for oil. It's a digital checking account for oil. Right. So you own a barrel of oil. And I think, when you look at the adoption curve of this stuff, right, which I think, and that's why it's cool talking to you, Chuck, is you kind of like pushing the adoption curve of a lot of stuff. I've seen you on the AI circuit and everything like that. It takes a while to get this stuff adopted, right? Because people are, it's new.
In the land of the blind, the one-eyed man's king. But no, I won't say I'm an expert on anything, but I know a little bit.
Yeah, but it's you look at what's happened to stable coins. The concept originated in the US like 10 years ago. Then that was being built by all these US entrepreneurs, right? They were at the head of the game. And then the administration came in, Biden administration, and basically looked at this stuff and said, it's a threat to the dollar. It's a threat to the seigniorage of the minting of coins of the realm, like all this conservative kind of old school thinking. They basically went on kind of a war against crypto, outlawed all the stuff. Gary Gensler on the CFTC.
Unbanked some of my friends.
Totally.
Yeah.
Guys I know on the West Coast got unbanked without knowing. Like actually, JP, our CEO, got unbanked by Wells Fargo, right?
Yeah.
So that was real. And that was like this crazy period where they're like, we're not going to take any innovation, blah, 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 right? And so then administration changed. Scott Bessent, like pretty damn smart guy, right?
And I love that he has fist fights in the halls of the White House.
Yeah,
Isn't that just epic?
Totally.
That's so cool.
He's a total cowboy, but he's really freaking smart, right?
Yeah.
And he looks at this stuff and he's like, why the hell are you banning stable coins? Because all this is going to do is increase the strength and the spread of the dollar, right? And so he reversed course. They signed the Genius Act. The rest is history. And now the stablecoin market is back in the U.S., right? The U.S. companies are now kind of leading the charge again, but it almost went the other way, right? And so, we're doing stablecoins of oil, and we're getting, frankly, there's the same type of doubt and in kind of questions around the oil stablecoins as there was in the dollar stablecoins, because, the oil trading system that well from like hedging and marketing and trading is a system that's been in place for like 50 plus years, works pretty well. Everybody's happy. The banks and the producers and the consumers can kind of hedge their risk, but there's never been a way to have oil and gas as a store of value, right?
Right.
And so this is a new innovation, and it's going to allow people to use oil and gas in a different way. But as you know millions of oil traders, right? They're like, well, who's short, who's long? What's my risk? How am I going to get ARB? Like how someone's going to screw me on this deal, right? That's just the natural paranoia of like people in the oil trading business. And it's kind of like what Scott Bessent did. He's like, he looked back and says, look, if I issue $1 trillion more treasuries to people who are effectively in Nigeria and Argentina and Afghanistan, right? Yeah, they may sell my treasuries one day. That's a risk. But in the meantime, I'm going to enjoy all this working capital that's going to prop up the dollar and the American economy, right?
Yeah.
And so he kind of thought beyond the risk and was like, here's the new way of thinking about it. And that's kind of what we're trying to do right now. Okay.
So the reason I find this so fascinating is obviously I lived through minus $37 oil. What was that? I think that was April 27th, 2020, but somewhere in there. Yeah. And the most Googled question that day was, how do I invest in oil?
Yeah.
And what was fascinating is USO popped up. And so I studied USO, and USO, I'm going to call it an ETF, although technically it's not an ETF. But basically what it does is it buys a NYMEX contract, and then it rolls that contract as it goes forward, and is literally the worst tracker to oil price on the planet. I'm going to totally make up all these numbers because I can't remember. But when I was studying it, there were, I don't know, 100. I will just round it to 100. There were 100 days where oil moved more than 1% or something.
Yeah.
And the USO was off by like 4% of that. And only once did it track directly. So it's just, it's a horrible proxy, but it was the only game in town. And so I actually went out and I drank too much one night, but had an epiphany, drafted an S1 for an entity called True Tracker. And the whole point behind True Tracker was to give someone a proxy for the price of oil so you could go long or short.
Yep.
I mean, if you're a home builder in Houston, Texas, you might actually want to short oil prices. You know, oil crashes, you're not building a lot of houses.
Yep.
Vice versa, you're a taxi cab.
Mattress Matt could use it.
Yeah, exactly. Or, you know, taxi cab company in Vegas, you might want to be long oil because that's your cost. Is,
Sure.
You know, so anyway, I kind of found this fascinating. So walk me through kind of the mechanics of exactly how this works. And Mom, we're saying goodbye to you. We're now going to, you know, pick a sophisticated oil person, Sharon Spurland, the treasurer at Plains. Let's explain it to her.
Sure. Yeah. So it's they call it in crypto land a primitive, which basically means it's like a one-to-one collateralized asset that you can basically buy in cash and you stick in your account. You don't have to post collateral against it. It just sits there in your account. But the mechanics basically are we sell a token to an investor, right? That token gets minted, and that gets minted at the close of WTI of that day, right?
Okay.
We adjusted a little bit on those rolls, so we're not getting caught up with that negative 37s, deal. But basically, we smooth it a little bit. But effectively, you're getting the day you buy it, you're buying at the close of WTI, right? Okay. And then you basically have a token that's freely tradable on the secondary market. We take, to issue that token, we buy a barrel of oil digitally from oil companies, right? So we'll go to our list of suppliers, which we're kind of growing every day, and we will effectively say who wants to sell oil today to attach to this, to substantiate the token. That's what our company's called, right?
Okay. Energy
substantiation. So that token then becomes attached to what we call a digital energy receipt, which basically is it's like a bank deposit, like a CD of oil, right? So think about the innovation we put together is we're creating a bank of oil, right? There's a bank of dollars, many banks of dollars, right?
Right.
There's banks of gold. There's vaults in London and Switzerland that have gold that back up the tokens, but there's not a bank of oil anywhere. There's 100 million barrels of oils permanently stored within about 10 miles of here, right?
Okay.
The Gulf Coast, the ship channel, et cetera. But there's no, you can't stick a barrel of oil in a sort of virtual bank and issue a certificate of deposit against it and withdraw it in 10 years. That concept doesn't exist.
Right.
That's kind of what we've set up here. And so you as a token holder, you buy it at spot, then that trades on the open market, right? So it should track very closely to spot. But the way you ensure it's going to track to spot is that you can sell it any day at the close of WTI.
For cash.
For cash.
Gotcha.
You can redeem it. So we don't make a market against, say, WTI futures or anything, but once a day you can buy and sell at the close, right?
Right.
And so it arbitrages intraday to the price of oil. So it's a spot product, right? And so what do you have when you have one of these coins? You've got in your wallet, Coinbase, Binance, whatever, Kraken, whatever exchange you use, Uphold. You have an instrument which will basically track WTI for as long as you hold it. 1 minute, 1 day, 10 years. And then, so that coin I gave you, like in 10 years, you'll be able to go and redeem it or sell in the open market for whatever WTI spot is worth at that time, right?
So, okay, that's interesting, because the way I got around that with True Tracker is I basically set up a royalty trust, and it would run for some period of time, 12 months, 18 months. And then when the futures contract paid out, it would distribute all the proceeds in cash. So that was my mechanism of, and it was because technically it was traded on an exchange. You could go long or you could short it.
Yep.
So that the arbitrage, it had to be close.
You have to have it arbitrage, or it's not a spot product.
Yeah,
right?
exactly. Yeah. So you would call up Jay Aaron, and if Jay Aaron's price was 75 and True Tracker's was 77, you'd short True Tracker all day long and buy from Jay Aaron, and lock in an arbitrage. So I always felt like it had to be locked in. So you're doing it by basically you can cash out.
You can cash out. And I mean, you had the right, you had the right structure there. I mean, basically you have to be able to, for it to be
I didn't, because I spent $1 million and I didn't get it done. It's a very fancy doorstop now at the Yates household, but
yeah, it has to be, it has to be arbitrageable against the forward markets, right? And so that's the way we get around it. And if you're a market maker, if you're Jay Aaron or you're Galaxy Digital, who has a market making business where you have crypto and a CME license, you can arb that, you can hedge that. So you're the one who's going to provide liquidity. Like if you want to oil 75 and you want to buy it today at 75 at whatever 1 p.m. in the afternoon, you call up, you'll be able to call up one of our market makers and they'll say, fine, here's 75.20 is your price, you're done. And then they will be able to hedge themselves by doing a TAS trade, like a transaction at settle. So they can basically hedge themselves in the market.
Right.
So, it's going to be complementary with the futures pricing, and futures dealers, right? It'll give them another market to trade basically.
Yeah, because, another thing I found interesting when I was digging in there and trying to figure out, okay, people need to be able, just regular Joes need to be able to go long and short oil. It's just too important to the economy. I mean, I ran a private equity oil and gas fund for 20 years, and at least at one point I was rich. Not anymore, unfortunately, but back in the day I was. Morgan Stanley, I had to beg and plead to be allowed to trade on the NYMEX. Mm-hmm. And so really all True Tracker did was give public shareholders the ability to trade in small bite sizes, what they could accomplish on the NYMEX. But trading commodities on the NYMEX is tough to do for an individual. And so,
I mean, you've got to, open accounts. You got to post collateral on a daily basis. You got to be looking at it every day. You can get blown out of your position if you aren't paying attention. It works for the industry. It doesn't work for investors, right? So,
and I always kind of had the theory too of, okay, Exxon's an investment, Chevron's an investment, but there's so many gunslingers in oil and gas. That's not a good proxy for oil price. I mean, they could do some really stupid stuff on any given day. And so, okay, so walk me through. I'm gonna play critical investor here and walk through so I understand the mechanics, and I'm trying to blow this up.
Yeah,
is where I'm going with this. So
Don't worry, you're not the first.
Yeah, exactly. So I buy the coin from you guys and I get it. And then I go to cash out. So you have to have the cash when I want to cash out.
Yep.
So how do I guard myself against your balance sheet?
So I think the way to think about it is there's 425 million crude oil barrels in the DOE stats. And I think it just came out this morning, right? There's a big draw because of the war, et cetera. Right. But 400 plus, right?
Yeah.
Those barrels are permanent inventory in the United States because they are used by oil companies for reliability purposes, not speculation. They're drawing down a little bit here and there because of the war. So there's a little bit of an extreme. Like I think it was 17 million draw this morning. That's a huge draw for the US, right? Usually it's like 2 million, 3 million. It stays real stable because what is that? Line fill in pipes, tank bottoms, oil in barges, oil in stored facilities that are like, Valero's holding 90 days of stocks because it can't stop producing gasoline even if there's fog in the ship channel, right? Yeah. There's all these, and so those barrels are backing your coin digitally, right? Okay. So we're going to buy oil from big companies who have a lot of oil, and they're going to look at this as a way to improve efficiency for their working capital, right? Okay. But they've got big balance sheets, and so if you the most obvious way you've gone long a coin and you decided I'm selling it, you're going to go in the secondary market, right? Yeah. You're going to sell it, right? Yeah. Okay. So 99% of the time, you're just going to sell in the secondary market. Yeah. Now, theoretically, there could be a dislocation, right? In the secondary market versus spot, or, if the whole system melts down or something like that, and you just want to redeem, even though it costs you a little money to redeem, you'll call us and say, I'm redeeming my coin, right? So then I reverse the deal with one of our suppliers, right? I'm saying you're going to then buy back that barrel that we purchased from you at spot. That's the deal we have with them. Okay. And they pay us 2 days later and you get your money 2 days later. Okay. So it's at the end of the day, you are reliant on performance of these large oil companies.
Governance more than your balance sheet.
Yeah. It's like there's oil there. They have to buy it back. It's going to take a day or two in the real world to get that stream of payments done. It's not all in the crypto. Crypto's like that, right? Yeah. TradFi's like 2 days, right? So if you choose to redeem, you'll get your money, but 2 days later, and you'll have there's a page on our website. It's called the transparency page. And that's what all crypto, like RWA tokens is what we like, real world asset tokens, gold, silver, et cetera. They publish, here's how many coins we have. Here's how much oil is in our system. Who's our auditor? Who's our custodian? You can like look and see what's backing up the coins, right? And so, but look, that's the question everybody asks. Like, okay, but let's run through an example. If a large oil company has 10 million barrels in permanent storage on barges, in tanks, in line fill, whatever, and we buy 1 million barrels from them, and they're using 1 million barrels worth of working capital, $75 million, whatever. They've got, a bank facility. They got tons of liquidity. If you call up and say, here, I just redeemed $100,000 worth of oil, they'll be like, sure, send me the invoice. Like, we're done. Yeah. Right? It's not a bit, and we're not going to buy. They have $10 million if they have 10 million barrels, we're not going to buy 9 million of their barrels, right? We're going to buy 3 million, right? So,
and I would think, is there going to, so you me watching you is just governance. Does the guy do what he says he's going to do? Yeah. And there will be some big custodian relationship like you were talking about earlier. So that's getting me comfortable there. Then we're going to these larger companies. Are you also going to run a credit function?
Yes.
Kind of on those. So old school banker watching the balance sheet.
Yeah, we run a full credit review, just like we were doing like an RBL or something like that, right? Gotcha. And so, but yeah, we're not the balance sheet you're relying on us. We have some capital to, like, if we get a little order, we'll just balance the system. Right. But there's a big redemption. It goes to the ultimate suppliers. We run an initial screen, which looks just like a credit review. like that you've seen a million times, right?
Yeah.
And then we have literally a credit officer, right? Who sits there and like writes all these things up and like plugs them into the system. And then that gets tracked, you know, in our book, and then ultimately is reported to the custodian. And
is the 10 million barrels in line, in barges, etc., is that part of the credit facility with these bigger companies? And are you doing some sort of
good? That's a great question, right? Because we need unencumbered barrels.
Right.
Like if you've sold them or pledged them somebody else, we can't buy them. Right. So what's kind of interesting is the upstream guys, like the producers, the oil that's between the lease and selling it to the market is typically unencumbered because their RBLs on their reserves, what's in the ground.
Right.
So it's kind of almost a piece of industrial equipment. Like it's like the truck on their lease or their office building, whatever. They don't pledge it. That's unencumbered. Now, they don't have as much of it as the midstream and the downstream guys are, to be clear, right?
Yeah.
So it's actually incremental capital for them because they, as one guy who we talked to, he's a smart CEO, he's like, holy shit, this allows me to sell that last barrel of oil. Right. The only way I was ever going to get money for that is when I wound down my business, right? Because it's sort of flowing from the lease to the LAC unit, to the terminal, to the pipe, to the marketer, and he gets his money 30 days later. And he never, that barrel that like sits on his lease is like dead working capital to those guys, right? So it's incremental. Now, your question about the credit facilities is a good one because mostly the downstream, like the refiners and the midstream guys have ABLs. And so but they're not cheap, these things, you know, and they get an X% advance rate, et cetera. So they're going to look at this as, and some of it they can't even finance on their ABLs. Like some of their like line fill and tank bottom stuff, they can't even finance on the ABL. So, but they'll take a barrel off their ABL and sell it to us.
Okay.
And the reason they'll do that is because it's cheaper, better cost of capital. You know, it's more efficient for them.
And what's an ABL?
Asset-backed loan.
Asset-backed loan.
Yeah.
Gotcha.
So those guys are like, you know, refiners.
I'm an E&P guy, so I'm an RBL guy.
Exactly.
And I was like, what is this ABL?
Yeah. Once you go into the midstream world, is ABL. So,
got it. Okay.
So they have like they'll be like, say a refiner, they'll have crude and tank, then they'll have diesel and gasoline and storage, and they'll, you know, Goldman Sachs or someone will give them an ABL on like 90% of that or something like that, right? And so they can finance it, but this is sort of cheaper, less invasive capital than the banks, because sometimes they make them hedge it. They have processing fees, throughput. You know, there's we actually think it's going to will help out banks because they love having the relationship loan as that ABL. It's a big, important piece of paper for the refiner, but that credit exposure sits pretty heavily on banks' balance sheets, right? Because they're always trying to do other stuff, do derivatives, do another deal with them. And so if you can,
that's the loss leader to the banks.
Exactly. So if you reduce the notional from 100 million to 80 million or 50 million for banks, they're like, I keep my paper, I keep my loan, I keep the relationship, I keep that loss leader, but I only have to take half the credit exposure. Like, cool, thumbs up, let's do it. Yeah. So these things are going to have to get sort of learned and worked out in the market, but that's how it's going to work.
Oh, that's kind of cool. All right. So mechanically, I understand how I buy and you get the cash. How does the process work of getting the barrel?
So we've set up, we've built a trading platform, right? And it's going to, and it's now fully operational, where we run a reverse Dutch auction for barrels, right?
Okay.
So think about an order comes in for a coin. Let's say $1 million comes in, and we've got 20 suppliers signed up, right? Each one of these suppliers has an account in our system. It's called Strata. It's a pretty cool. Our tech guys built it. They look in the corner. It says, you know, Chuck Yates Enterprises, your line is 200,000 barrels, right? Because that's what you have in tank. We've done our review.
You did your credit on me.
Yeah, I've done my credit on you.
Gotcha.
We know you've got 400,000 barrels, and we're going to give you a line of 200, right?
Okay.
You'll get an email. It's like an RFP, right? Yep. And it'll say, we need 1 million barrels. Submit if you like, if you want to, if you need the money, if you are awake, or if you want to participate, there's no obligation. And so then you will bid you will basically submit your barrels at a price which is relation to, it's a discount to the spot price. And you're going to bid, a small discount that's going to be an attractive cost of capital. Let's say 2%, 3%, right?
Yeah.
So you'll be fine. If oil's 100, I'll bid 97. I'll be great. You win. Now your barrel is going to be substantiating that portion of that order. You're going to get a energy receipt. It's Mobius, hedging. You've probably heard of Mobius.
Oh, sure.
Yeah, so those guys, the hedge advisors, they're awesome. They're our partners in this, and and they basically manage the front end for producers, right? So you'll get an email from them saying you sold, 100,000 barrels, just like you did, kind of like a hedge, and then that order gets filled. We fill the order for the investor, and then now you've got that digital receipt where effectively I've bought 100,000 of your barrels, and you keep that oil. It stays in your tank. You keep it. We never, until someone redeems a token, you just sit on it, right? So
I was about to say 3% permanent financing, not even annual.
Yeah. So it's a good deal for folks, right? So
Mobius is actually who I worked with on True Tracker. So
cool.
Paul Smith rolled up his sleeves, spent a lot of time with me.
Yeah.
They were because they were basically going to go into the market and buy the financial futures for us and help us on that front.
Yeah, no, they're great. They're understand every aspect of the energy markets, and they've helped us troubleshoot a lot of stuff kind of in our mechanics and things like that. And and ultimately they've got a risk system built. So we're like, why are we going to build that ourselves? Like and producers and other companies are used to it. So
okay. So I understand that. I'd also think if I'm a company of some sort, no reason not to max out my capacity with you every chance I could get. I mean, it's permanent financing.
Yeah. I mean, once people understand it, that's what they're going to do rationally. Yeah. Right. It's going to take a while for them to understand it. Right.
Because I in effect pay the interest up front.
You get a little discount and then you just sit on that. Right. So, companies are used to funding with either equity or debt. Right.
Right.
The pros and cons are both. Everyone understands. You issue equity, you've sold a piece of your company. You issue debt, you owe that money back under very strict terms at some point in the future. And if you don't pay back, then they got you over barrel, right? So those are risks that every CFO, the pros and cons of that, they understand clearly, right? Because if you get debt and it's 10%, that's better than debt that's at 6%, right? It's just people have gotten used to debt or equity capital over the years, right? So this is a new form of capital, right? It's blockchain capital. That's kind of what I tell people. And the risk profile and how it operates is different from those guys, right? You're going to receive capital at a small discount, and then you are subject to some potential uncertain redemption in the future that doesn't depend on me. It's not a short position. It doesn't depend really on the investor. It depends on the overall ecosystem of these coins net growing on a net basis over time, right?
Right.
And that's the risk you're taking. And that's the risk that people have to understand a little bit better, right? And so you don't have a maturity necessarily, although we're going to have tools within the program that if you want to do it for 1 year or 2 years, you can, right?
Okay.
So you'll be able to manage your liabilities and things like that if people want to. But net, the only time you have to redeem is if there's a net burn in the system, right? And so what we're trying to kind of educate folks is like these coins gradually build over time, right? In terms of the overall outstanding, like, take the stable coins, right? I think one of the big resistance that the US government had was, well, we sell 500 billion in treasuries tomorrow. and then everybody redeems the next day, that's going to screw up the treasury market, right? What I think Besant realizes, no, these are like guys buying $5 of this stuff in Nigeria, and another guy buying $5, and another guy buying $100. It just gradually the sort of ecosystem grows, and so it's very stable capital, right? Once it starts getting that network effect gets big, right? And so that's what's going to happen in the oil and gas, for oil and gas stable coins. But we need lots of users, right? You need guys who are buying oil, as a hedge, like you mentioned, for gasoline.
Right.
Where you have guys buying it, for their grandkids. Like,
No.
I think every Texan should have like a WTI coin in their stocking, right? Because they're, grandpa gives them a barrel of oil. Like, how can you do that today? You can't. So
right.
Because
if you think about it, I'll just make this up. If I spend $4,000 a year on gasoline, just driving to the office and stuff, I don't know what the right number is because I've never been a wealth manager and never understood the portfolio, but owning some coins probably makes some sense. If I know I'm going to spend $4,000, they could go to $6,000.
Yep.
Yeah, you ought to own something.
It is a 1-to-1 hedge, right? And so I think, and we've seen that there's, what's been great in the last couple of months is the attention on oil as a macro risk has gone through the roof, right?
Yeah.
You've seen it. And one of the big questions we've always gotten from investors or partners is like, well, this is a cryptocurrency, right? It's a blockchain based coin. Do traders in blockchain care about oil, right? And it was a question we really didn't know the answer to because most, crypto traders, especially retail traders, they're like, they call them degens, right? They're 20-year-olds in their mom's basement in like Kuala Lumpur, right? And but there's 700 million accounts worldwide, right? Basically everybody under the age of 25 has a crypto account. Like you just met my intern. Like that guy he doesn't trade his Fidelity account. He trades his crypto account.
Have you heard the Yates family crypto story? So oldest daughter, Charlie, age 11, is mining Bitcoin on the home computer unbeknownst to mom and me, right? And proceeds to mine 9 Bitcoins.
Damn.
This is way back in the day, right? And Charlie comes to me and says, Dad, I need a pair of Yeezys. I'm like, what the hell are Yeezys? Those are Kanye's shoes. And I go, okay, well, how much do they cost? $900. I go, you don't know. No 11-year-old needs $900 shoes. Can't do it. So all of a sudden a box comes in the mail and it's a fake pair of Yeezys from China, some address, Shanghai, whatever. Yeah. And I'm like, what the hell is that? Well, Dad, I went and bought some fake Yeezys. She puts them on. She proceeds to go outside. There's a puddle of water. She steps in it. They disintegrate. And I go, how did you get those? I used my 9 Bitcoins on it. Jesus. Yeah. So about every 6 months, I text her and I go, hey, what's 9 Bitcoins worth these days? Shut up, Dad.
Yeah, you could have bought the entire stock of Yeezys that Adidas gave back to the market until they kicked him out.
Yeah,
right?
Exactly. After that rant. Yeah. One last question. So the credit, and again, I'm wearing my critical investor hat. The ongoing credit review of the people you have bought the barrels from, old school oil and gas guy. I have a reserve-based, redetermination, and I loaned you 20 and your reserves went down. Now I should only loan you 10. You got to pay me 10 back. Are there mechanisms in your agreement to kind of deal with?
There certainly are. I mean, you make an attestation, right? When you sign the agreements with us, it's just one agreement. It's super simple, but it's like a GTCs, right? And you basically say, I have X amount of barrels in these facilities, right? And then annually, we're going to ask you to reaffirm that, right? Okay. And we will have the ability to audit, and we can look at a lot of public data and check and And if you're public, it's announced every quarter. Like, here's my inventories of X, Y, and Z. But we basically, the theory is that we're never going to buy enough barrels so that your normal business variation is going to affect it, right? So, but if you sell half the company, you're going to maybe have to buy half those back, right? Because you had 1 million barrels, we underwrote you on 1 million barrels. Now you've gone to 500,000, so that's a material reduction. So we'll then at that point you will have to redeem. But the interesting thing is, I mean, look, you've been private equity for a long time. The first question I get from companies, like, what happens if I sell?
Yeah.
Like, because, the first thing that people, the biggest issue for anybody is that they're constrained in any way, shape, or form when they're when they're getting a liquidity event, right? And so you can literally unwind this in a day. So you can buy coins and redeem them, or you can just go to us and then just unwind the allocation, and then we'll replace them with someone else's barrels in one day, right? So this is not a long-term thing you have to worry about hanging over your head if you're selling a business, right? So, and that's, if you compare that to, like, you're mentioning like a hedge, right? You've got to call up your banks and be like,
is it potentially transferable to the new buyer?
Sure.
I mean, okay, I got to do credit review on the new buyer and they check out. Great. We're good.
I mean, one of the big use cases that we've seen that people that is friction for folks is line fill, right? When you're selling, if you're an upstream or a midstream guy and you're selling an asset that has line fill in it,
right?
There's usually or oftentimes that gets funded in equity because it's kind of hard to finance. And so there's that adjustment. Well, my line fill was worth 30 million when I started working on the deal. Now it's worth 50. God damn it. I got to go put another $20 of capital against this deal. Right. And so we'll just be like, well, we'll own that line fill from company A and we'll own it from company B, as long as they're credit worthy, et cetera. Well, we don't really have an issue. Like, so I think that'll be one of the larger use cases kind of in the oil company side of things.
Oh, that's actually really interesting that you could, I mean, the gold standard was you sign a PSA and you lock your hedges, right? In effect, sign the PSA and you just, you normalize the fill.
Yeah.
Yeah. Okay.
So
I could see that.
I mean, in a lot of midstream companies, they'll be signing a new customer, for example, and they're like, well, who's financing the line fill, the buyer or the seller, right? Or is the midstream company selling a 10-year contract to somebody financing it, or is the purchaser of the oil having to, buy that, right? So there's a lot of interesting, use cases that we hope smart people start working on this and coming to us and saying, hey, here's an idea. Let's use it for this. Let's use it for that.
Right.
And so we're already getting a bunch of them. It's like, for example, why do you get paid ACH transfer if you're a non-op owner, like 90 days later with a mysterious price of oil? Like, why? I don't know. That's just how it's been done for 100 years, right? And mailbox money is mailbox money, and no one, unless you're a sophisticated fund, you're not really questioning that. Like, when you get it, how much you're getting, what oil price you got it at, right? Now you can and we're actually working with a couple companies who are tokenizing LP interest. They're basically like, taking a typical, AFE or PDP deal, putting them and selling them via tokens as opposed to subdocs. Right. Yeah. And so
I had those guys on the podcast.
Oh yeah. They're great. Yeah. So, I mean, they're one of the few and the first guys, and they're doing great. And they're going to give their investors, well, do you want dollar stable coins or do you want oil stable coins? You just let me know the first of the month.
Yeah. No, that's pretty cool.
And that's never been done before. Like, you've never been able to make that choice.
Yeah.
Right? It's like, we call it like digital take in kind, right?
Right.
And so, we'll see. I mean,
God knows I don't want any of my former CEOs to have that, because they would have taken everything in oil-based stable coins. They were always
it's no skin off your back at that point, right? You just convert your oil payments to coins as opposed to dollars, right?
Yeah.
So, so we'll see. I mean, I would see in the future, you can stick a meter, or you can stick a computer attached to the SCADA system or the meter on a well, and you can literally mint coins at that computer and send them to all your investors, right?
Yeah.
The same day. So you could be like looking at your phone and be like, well, I just got 19 WTIC for the production today at, well ABC, right? That's never been done before either. So,
I mean, I've got we could do another whole hour on, if we settled everything immediately, I think you'd suck 20% of the cost out of the system. I mean, the amount you have to post in margin, the fact it takes you, 90 days to close your books and get paid. And there's
a lot of inefficiency there.
Yeah, being able to do it. So you want to hear from folks that want to buy these oil-backed stable coins. And then the other side of the trade, who are those type of folks that you want to hear from?
So oil, anyone who has any substantial amount of inventory, right? If you've got 20 barrels of inventory because you're piped right to a midstream provider, you're probably not the guy, but you've got, you have permanent, semi-permanent inventory in your system somewhere. You want to unlock value, talk to us. Right.
Gotcha.
And so we would like, we're talking to big guys, small guys, medium guys. I think, we also would like this to be Texas and US centric. Right. And so,
as damn well everything should be.
Yeah, exactly. So, I think there's a lot of countries in the Gulf that are trying to do things kind of similar, right? And so we love the worldwide standard for how this whole thing gets documented, how it gets substantiated to be like American built, and then they can follow us, as opposed to, the Bahrainis coming here and be like, would you like to sell me your oil under here's, whatever it is, right? So, but yeah, anyone, I think eventually folks are going to realize that, creating a bank of oil brings capital to the industry. And so we'll get the smaller guys, the medium-sized guys, they need the money, or they need the money at cheaper rates, or they've got higher cost of capital. I think the bigger guys are going to realize this is going to create an ecosystem for them that is going to allow them to run their businesses more efficiently, and also, make their oil like the gold standard for the world, right?
Right.
And, so like, just like stable coins, right? People want US treasuries. They don't want Canadian treasuries, right?
Right.
They want US treasuries, right? And the guy in Nigeria who needs oil, who needs dollars to like buy bread, he's using US treasuries effectively to make that transaction. Same thing, the guy in Australia who wants to go long oil, like the best product for him is going to be WTI coin, right?
Yeah.
Not Ural coin, not, Oman Light coin, right? It's going to be WTI coin, right?
Yeah.
And so that will effectively be like the de facto marker for oil as a store of value going forward, right? And so, so that's that's where we are. We're still early days,
very cool.
But it's
very cool. So how do people reach you?
We got a website, energysubstantiation.com. Like, it's a super catchy name, but
we'll work on branding later.
Yeah. And reach out to me, Mobius, they know where I sit as well. And I kind of go between here and the West Coast, which is where all the dev team is out there. So,
gotcha.
And, love to, what's been great is, we've had a lot of people who are experienced in this business, like, kick the tires really hard, like a lot of red lines, a lot of like push back on little things here and there. And that's,
you and I went deep at lunch the other day.
Yeah.
I mean, I feel like I grilled you pretty good.
Yeah. And I'm in the process of getting grilled by everybody, like distribution partners, investors, oil companies. Like, I am literally in sort of diligence, compliance, response mode, and it's fun. I mean, it's a new thing, right? It's sort of like when I was, Credit Suisse in the 90s, like an ISDA was a crazy thing to get people to sign, right? It was like, what the hell is this, right? And everybody had like their view on it and this and that and the other, and now it's pretty standard, right? So I think the adoption curve is going to be kind of similar. But
cool.
So
we'll appreciate you coming on. Cool stuff.
Well, thanks, Chuck. It's been great hanging with you, man. And hope to continue the discussion. So come out and see us in California if you ever want to.
Anytime you want to get rid of energy substantiation and use True Tracker, I'll give it to you for $1. You already gave me a barrel of oil. The name's yours anytime you want it.
I know. Well, you sent me this one. It was cool. I looked at it. I mean, that was super deep. But anyway, so it's been, keep up the good work, and been good hanging with you.
You too.